Morning, everyone. Grayson here from Grayson Stalvey Financial Coaching. So COVID-19 coronavirus, it has impacted our entire way of life over the last couple of weeks. And there's been a lot of financial uncertainty going along with that, from stay-at-home shelter-in-place orders to small businesses having to temporarily close their doors, people being laid off either permanently or temporarily. There's a lot of uncertainty. The goal of this video is to bring together all of the relief efforts that our government's putting together into one centralized place and hopefully make it easy for you to understand. So let's jump in. So government relief efforts. The first one's a stimulus package. This one's probably the one that most people have heard the most about. It has been being debated in Congress for the last couple of weeks. With a bunch of different proposals set forth. Early hours of this morning, it looks like the Senate agreed on a package that sets aside $250 billion for direct payments to individuals. And what that looks like is if you're an individual that earns $75,000 or less, you would get a check for $1,200. For married couples, that limit goes up to $150,000, and you receive $1,200 per person, so $2,400, plus an additional $500 per child. It was unclear to me when I first read through the agreement whether or not that $500 was available for individuals as well, individuals with children. I suspect that it will be, but stay tuned for more details to come out on that. Now, those payments, those checks do scale down as your income increases, and they phase out altogether at $99,000 for individuals and $198,000 for couples without children. Now, this isn't signed, sealed, and delivered yet. It's still got to pass through the House of Representatives and then be signed by the president. But this pretty much guarantee it will be signed. There may be some minor changes, but it will look a lot like what was released this morning. So stay tuned for that. Next comes to taxes. So if you haven't already filed your taxes for 2019, the filing deadline has been moved back from April 15th to July 15th. So what does that mean for you? Really, if you expect to receive a refund, you should go ahead and file now. That's likely your best course of action, because the sooner you file your taxes, the sooner you're going to get that refund. Or if you expect to owe money, then you now have the option to wait until this whole situation stabilizes. So if you're negatively impacted financially, if your income is lowered or you're not making as much money as you used to because of the impacts of COVID-19 and these stay-home orders and whatnot, you now have the option to wait until July 15th. And I wrote think cash flow here. If you're having trouble making ends meet, this gives you the flexibility to delay making any payments to the IRS. So it's a good option to have. Next, we have federal student loans. A lot's been going on with this over the past couple of weeks too. So federal student loan interest has been waived through May 19th, which means any payments you make will be principal only, and you're not making payments on interest. Also, you now have the option to suspend payments for at least 2 months. So when you put your federal student loans into forbearance, you're not going to accrue any interest during that period. Additionally, if you are already delinquent by 31 days or more on your payments, then you're going to be automatically put into forbearance as well. If during this time period you become 31 days delinquent, you're also going to be automatically put into forbearance. But the best option here is to be proactive and contact your service provider if you expect to have any difficulty paying your federal student loans, and go ahead and get put into forbearance right away. Next, we have the extension to the Family and Medical Leave Act. So this was signed last week by the president, so it is law now. And it becomes effective April 2nd through the end of the year. And what this does, it extends FMLA benefits to people who are unable to work because they need to care for their children. And this could be because schools all around the country are closed, daycares are closing or have pretty significant restrictions, or your usual childcare provider is unavailable because of the public health emergency. If this is you, then you're now eligible for no less than 2/3 of your regular pay, up to a maximum of $200 a day, or $10,000 for the benefit period, which is up to 12 weeks. And that 12 weeks includes the usual FMLA job protection. So if you take advantage of this and you take a leave of absence for up to 12 weeks, your job is guaranteed when you come back. There are some restrictions to this. First off, it only applies to businesses that have less than 500 employees. And there are also exemptions for healthcare businesses and emergency responders. And if you work for a business that has 50 or fewer employees, this doesn't apply either. So if you have questions about it, this is something that you're interested in pursuing, talk to your company's HR and see if you are eligible for this. Last one we're going to talk about is mortgage relief. So Fannie Mae and Freddie Mac have both put out some relief guidelines to their mortgage providers. The big one is that you can now put your mortgage into forbearance for up to 12 months if you are financially impacted by COVID-19. During that time, penalties and late fees are waived. Additionally, they're suspending all negative credit reporting right now. So if you're late on a payment, that's not going to negatively impact your credit score for the immediate future. They're also suspending foreclosure sales and evictions through May 17th. So a little leeway and breathing room for you there. Just like with the student loans, if you're interested in putting your mortgage into forbearance, then you just need to contact your mortgage servicer for more information. Now, this doesn't mean what this looks like at the end of the forbearance period is going to vary depending on who your mortgage is with and your individual situation. It could be that you just tack on a year to your mortgage and you pick up where you left off in 12 months. Or you could possibly just have an increased mortgage payment in 12 months to make up for that lost year. But that's going to be between you and your mortgage servicer. So obviously it's a fluid situation. All the information I just gave you is valid as of March 25th. Things can change, and as they do, I'll try and provide updates. If you have any questions about anything that I just talked about, or you want some more personal help, please feel free to reach out. The link showing right now is for a free 30-minute discovery session just to talk about whatever you have on your mind financially. That link will also be available in the comments. So stay safe out there and have a good day.